Let me know the country. Jamaica. Never give up. Hello, never give up. Let me know also your questions that you have. Mohammed, were you able to join? Let me know if you got the link. Hi, never give up. How are you? Today we are looking, by the way, we are looking at the bank reconciliation statement, and we are streaming from YouTube, as you can see. I'm streaming from YouTube. We're streaming from YouTube. So there's a link on my there's a link on my TikTok story to take you to the live. My account on YouTube is Accounting and Finance Playbook. Mohammed, let me know if you are able to join. Let me know. For the people who are here, for you to be able to see the stream, you should be on Accounting and Finance Playbook. Let me know. Okay, never give up. Check, let me know. Let me confirm for the people who are able to access the YouTube. Confirm, confirm, confirm. Confirm, confirm. Great. I can see Mohammed. Can you hear me well? Can you hear me? Can you hear me well? Just confirm. For the people on YouTube, let me know if you can hear me well. For the people on TikTok, we are live on. Nice. We are live on YouTube. Today we are looking at the bank reconciliation statement. We are looking at the bank reconciliation statement. Let me know for the people who are here. Let me know the people on TikTok. Mohammed, we're starting in a few. Yeah, so the people on TikTok, you're going live. You're about to start the stream in a few. For you to join the stream, just use the link. The live is public. It's not only for members, it's for everyone. You can join. Hi, Keep. Hi, Calvin. Hello. Hello, for the ones who are joining, I'm saying we are live on YouTube. We are streaming on YouTube. Join us on YouTube. We are about to start. We are about to start. Anybody? Let me know. Okay, never give up. We should start. Okay, Manisulu. I am live on YouTube, okay? Just use the link on my TikTok stories. We start then. Okay, so today we are looking at the bank reconciliation. Mohammed, you can hear me well? So today I want us to look at the bank reconciliation statement, how we do the reconciliation, how we do the reconciliation and prepare the statement, okay? You're going to see companies do the reconciliation to verify their cash balances as at a particular point in time. And they do it depending on their transactions. The frequency of preparing this statement depends on the transactions that a company has. They could say we are going to do this reconciliation weekly. They could say we are going to do it monthly, depending on the number of transactions they have. So, for example, if you see a company that does not have a lot of transactions, they can decide we are going to do this reconciliation once at the end of every month, okay? If a company has a lot of transactions, they are going to opt for we can do it even daily or do it weekly, okay? So the frequency depends on the number of transactions they have going on in their bank, okay? So what does this bank reconciliation mean? It means we have our cash book. What is the cash book? The cash book are our internal accounting records, okay? These are our internal accounting records. So as an accountant, when you are working in a certain company, when you make a payment, you make a journal entry. Okay, so if you make a payment from using the bank, then you have to go and credit the bank. Okay, because when we receive money in the bank, what do? We debit cash account to recognize an increase in the cash account, and then we credit whatever whatever we were paying. Let's say if it is revenue, let's say if we were paying for something, then we make sure we reduce that. Okay, so definitely when we get paid, there is money into the business, we debit cash account. Okay, when money is leaving the bank account, we credit that bank to show a decrease. Okay, so always remember, a cash account is an asset account. To increase it, you debit. Okay, and to reduce that cash account, you credit. Okay, that always have that in mind. Now let us look at the bank statement. Now the bank statement, on the other end, is an external. It is an external record. Okay, kept by who? By the bank. This is an external record kept by the bank, because when you, even at an individual level, if you can go and ask the bank to give you your bank statement. It shows the records of what is coming into your bank and what is leaving your bank account. Okay, so we want to use these records that the bank has been keeping and compare them with our internal records to see that we have the correct cash balance at the end of a certain period. We want to make sure we've not missed anything and we are aligned with what is happening in our bank. Okay, so we are just using an external record to validate, or maybe you could say verify, what we have recorded in our books. Okay, so basically this is what is in the bank. And note one thing, when it comes to the bank records, you're going to find what they refer to as credit. What they refer to as credit is actually a deposit. It is actually a deposit into the bank. Okay, so when you deposit money to your bank account, or if someone pays something into your bank account, they record it as a credit, and then when you withdraw, they record it as a debit. Okay, so when you're going to find it is basically opposite of what you're doing in your cash book, because this one is someone else business. The bank statement is basically a record of the bank. It is their business. So this is how they recognize, because when you deposit money in the bank, that means they have your money. Okay, so you're going to see what is debit in the cash book is what is going to be credit in the bank statement, and what is actually a debit, that is a withdrawal, that is money coming from the bank, is what is a credit in the cash book. Okay, let me know up to that point, Mohammed, and the ones live on YouTube, if you get what I mean. Let me know if you get, before we move to the next step. Do you understand that? Let me know. Just chat it in there so that we are aligned. Okay, just chat. Do you understand what I mean by that? Just chat there what I'm saying. I'm going to elaborate here. Good, Mohammed. Okay, Zakari, nice. We are saying in the cash book, let me summarize this. We are saying in the cash book, debit is money coming into your bank, and credit is money leaving your bank. Okay, this is how we record it in the cash book. In the bank statement, because this is now the bank that is doing this, and it is another business. Okay, this is your business, your internal records. This is an external record. When money comes into your bank, they usually record it as a credit. So money has gotten into your bank account, and when money leaves, when money leaves that bank account, it means they no longer owe you that money because you've taken it. You debit. So in the you debit. So in the when you're comparing the transactions in the cash book and the bank statement, remember what is debit in the cash book is what is credit in the bank statement, because this shows the money that has gone into the bank. This shows the money that you have received. Then on the credit, this is the debit, because this shows the money that you've paid out, and this shows the money that has moved from your bank. Okay, so up to that point, I believe we're together. Okay, now I want us to use a practical example to understand this. First, I would like us, if you know, just start there. What makes there to be the bank balance to be different from the cash book? What makes the bank balance to be different from the cash book? What makes the bank balance to be different from the cash book balance? Okay, because that is what is causing us to do this. It's because at the end of a certain period, you're going to see there is a difference. Why? Anyone? I've done this before. You could have unpresented checks. That is what I'm asking about. You could have bank charges that you've not included in your cash book. There could be an error, but an error mostly doesn't occur on the bank side because most of their systems are automated. So mostly it could be on your end. Okay, so these are some of the reasons. Okay, so let us use this example to get to understand them better. Okay, so we have this cash book asset. This is 31st August 2025. Okay, we have the balance brought down, that is from the balance from the previous period. We have this Kabao customer that we have a debit of 45. We have Wanjiko 28. We have a wire transfer. These are receipts from customers who have come and paid. You see this Kamau, they paid 45,000. Then they paid, Wanjiko paid 28,000. Then we have a wire transfer customer who paid 25th August. They paid 36,000. Then on the credit side, we have a supplier we paid 32,000. We have a supplier B we paid 24,500. Then we have a supplier C that we paid this, and then this is the balance carried down. So as at this particular point, the balance was 131,500. That is 31st August. Okay, now we extracted the bank statement as well. Now this is the bank records. Okay, we had started the bank records and saw that our bank balance as at 31st August was 150. Yet our cash book was showing 131,500. Okay, so this is where we come about now to do the bank reconciliation, which basically involves checking what is in the bank statement and checking to see why is it not in the cash book? Why is that is in the bank statement is not in the cash book? Once we check and add those items that are in the bank statement and are not in the cash book, we are able to get what we call an adjusted cash book. An adjusted cash book. And then once we check that, we're also going to check the things that are in the cash book. Why are they not in the bank statement? For instance, a very common reason why that occurs is you have paid your supplier using a check. When you give them a check, they might delay to take it to the bank. Okay, so it's basically unpresented check, or rather it has not yet been processed by the bank. So you see, you're not going to see it in the bank statement, but you have recorded it in your cash book. That is your internal records, because you wrote the check and you gave them. So it will appear in one of your credit you gave this check out. Okay, but it has not been presented to the bank, so that the bank now can record that there is a debit, that is a withdrawal from the bank that has gone from your bank account to to this supplier's account. Okay, so basically now I want us to be able to prepare to do a reconciliation for this scenario. Okay, so here we have the cash book column. Then we have been given this additional information. You have to sit down and scrutinize what is happening here, and then you see, even without the additional information, you should be able to compare these. If you look at, for example, now the Kamau customer paid 45,000. We come here and see, you can see there is that credit. Okay, that credit, remember I said in the bank, this is with this is a withdrawal. Okay, and then this is a deposit. Actually, no. When you deposit money, but the bank owes you that money, so to them this is a deposit because it's a credit, because to them you owe that money. Okay, then debit is a withdrawal. Don't confuse that. It's actually opposite on the other side. Okay, so we have Kamau deposited 45,000. We can see here it's in the cash book, so that is okay. It is in both. Okay, then we have a check supplier A. So we paid this supplier A 32,000. Okay, on 8th August. We can see it here 32,000 as well. So okay, so we see this one, it's also there. Then we have Wanjiko who deposited 28,000. Can we see it in the cash book? Yes. So that one is correct. Okay. Then the check, we gave a check to supplier B of amount 24,500. Did we record that? Did we record that supplier B? We credited that we have paid them 24,500. Basically, what we are doing, we are comparing the cash book transactions and the bank statement transaction to look for outliers. Okay, then we have check, we said we've got this 24,500. Then we have bank charges 1,500 for that month. Have we recorded bank charges? No, because bank charges is something that we see at the end of the month. This is the amount of money that this bank has charged us for using for the bank transactions, and this is 1,500. So we need to those are one of the items you should always add in your adjusted cash book to recognize a credit of 1,500. So all costs that you're going to see that are in the bank statement that makes sense to you. Maybe you have a subscription that deducts money directly from your bank. You need to come and make sure you record it in your cash book. Okay, then this is one of them that we need to make sure it is included. Then we have a direct deposit from the customer of 15,000. Let's say your customer walked in and went to the bank and deposited this money to your bank account. So probably they didn't tell you, because you had presented some customers, when they pay, they send you a receipt, others don't. Okay, so we have this 15,000. So if we look at our cash book, we should have a debit of 15,000, but we don't have it. This means this has not been recorded in the cash book. We need it to go to the cash book. Okay, then so we have identified two outliers, that is two items that have to go to the cash book. Okay, that have to go to the cash book. Then when you look at the cash book, you also need to see what is in the cash book that is not in the bank statement. What happened? We have actually two items. As you can see, there was a wire transfer from the customer. Let's say if they were paying from abroad or like overseas, sometimes a wire transfer takes time. They sent you a receipt to show that they have initiated the process of this wire transfer. So you recorded that they have paid you this 36,000, but it has not reflected in your bank. So these things you need to be able to identify them. Okay, so this is basically, and this is an example of it has not yet come to your bank, but it was already initiated. Okay, then we have We have supplier C. Supplier C, we have a credit of 41,000. What happened? You're going to see from our additional information here, the check of 41, they presented a check issued to supplier C, so they had not yet presented by this. So this is basically a good example of unpresented check. Unpresented check, okay? So as you can see, this is actually those outliers that we have identified. That wire transfer of 36,000 was initiated on 25th August, but then it was not credited until 1st September 2025, meaning that is when it was credited into the bank. That is when it was added in the bank records. Okay, for the people on TikTok that are asking, I am streaming on YouTube. I'm streaming on YouTube. There's a link on my TikTok stories. There's a link on my TikTok stories. Just click on it. You're going to join us on YouTube. Okay. Then we have also a customer that deposited directly, but we are not recorded in the cash book. Okay. So the first thing we should do is create an updated cash book. We create an updated cash book. Before we get to the bank statement, let us create the updated cash book. What do we do? So we have, let me draw this so that we get some network. For the ones who are live on YouTube, let me know any questions so far. If you have any questions so far, just chat it there. If you understand and you're together, just chat it there. Mohammed, Farhan, let me know. Let me know any questions so far, anywhere you want me to elaborate. Just chat it there. Just chat it there before we proceed. Or if there's no question, just chat it there. We proceed. Let me know. Let me know. Let me know. Let me know. For the people on TikTok, I am live on streaming on YouTube. I am 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 streaming on YouTube. Okay, for the ones, if there is no question, then I'm going to ask a question, which is, we need first to do an adjusted cash book, which I said we need to make sure the things that are in the bank statement that we had not recorded in the cash book are recorded now, okay? So that is why we come up with an adjusted cash book. So the first question I'm asking for the people who have been following, the ones who are joining on TikTok, I am live on YouTube. I am streaming on YouTube. The name is Accounting and Finance Playbook. Ariana, there is a link on my TikTok stories. There is a link on my TikTok stories that is going to take you directly to the stream. For people asking, I am streaming on YouTube. There's a link on TikTok stories that will take you directly to the stream. So for the ones who are here on YouTube, my question is, the first thing we noted that was in the bank statement that is not in the cash book was the bank charges. How do we record bank charges to make an adjustment in our so that we have now the adjusted cash book? Remember what has happened. What is a bank charge? What is a bank charge? Let me know what we debit, and what we credit. Let me get the comment. We are going, when we want to record what's the journal entry we record, we are going to pass to record this bank charge cost. What do we record? Comment. Let me know, Mohammed. What do we debit and what do we credit? or how do we record these? Remember, a bank charge, the bank is taking some amount from the bank account. So what do we need to do to the bank? To our cash book, what do we do? Okay, so basically we need to recognize a net expense, and that is the bank expense. We need to record the bank expense, that is the bank charges expense. Okay, good, Zakaria. Yes, we credit. And then for the cash book, this is now where we credit the cash book account. So basically what we are saying is, when it comes to the bank, in recording of our bank charges in our own accounting records, we need now to have a credit of 1,500, because this is money that has been taken by this is the money that has been taken by by the bank. Zakaria, that is correct. Thank you. Then we have, which was the other thing that we noted with was the direct deposit customer of amount 15,000. We yes, failure for real. Yes, we are doing the bank reconciliation statement. We are doing good evening. So good evening too. So today we are looking at, now, how do we record the direct deposit that we've seen we received in the bank, but it is not in our cash book? Welcome, welcome. Yes, we're looking at the bank reconciliation statement. Okay, so we have 15,000 that we need to record. What do we do? Do we debit or credit the cash account to record this receipt from the customer? Let me know, chat there. Do we debit? Is it going to be a debit or a credit? That is this receipt. It is a receipt deposited 15,000 directly into the bank account. This is a customer. You can say this is customer. This is customer K. Customer K direct deposit. Is it a debit or a credit to the cash account? Let me know. Is it a debit or credit to the cash account, and why? Someone to comment. For the people on TikTok, I'm streaming on YouTube. There is a link on my TikTok story. There is a link on my TikTok stories. We debit. Good. We debit. Why? Because this is an increase to the cash account. This is an increase to the cash account, which is an asset account. And to increase an asset account, you debit. To decrease an asset account, you credit. In this case, we are receiving money. So this is a debit to the cash account, an amount of, what was the amount? 15,000. So here we're going to have 15,000 on the debit. Okay. So what is the other thing? What is the other thing that we saw that is in the bank statement but not in the cash book? Is there any other thing? No, it was only these two items, because the other things we found them, they are already in the cash book. So what is left is basically what is in the cash book and is not in our bank statement. One thing now to note, this is where the bank reconciliation statement comes in. When it comes to bank records, you can't call the bank. Remember, you're doing this so that you, as a business, you have the actual cash balances at a particular point. So you're not trying to change the bank records. The bank records, they are okay because they are showing the actuals that have come into your bank during that period. Okay, but in accrual accounting, what do? We make sure we have the correct bank balance, or rather cash balance at a particular point. Okay, so in this case, what now is in the cash book that is not in the bank reconciliation, this is what we go and take it to the bank reconciliation statement. But first, we need to be able to get the new balance in the cash book. Okay, so we need to reduce the bank charges, and we also need to include an addition of 15,000. Okay, Remember here before, the balance, what was the balance carried down? The balance carried down was 131,500. 131,500. So here we had a 131,500. So when we take that, we sum 15,000 and we less 1,500. What is going to be the balance? What is going to be the balance actually brought down? What is going to be the balance? You can just chart it. Chart. Say do the math. Chart. I hope you understand why we are lessing the 1,500, because this is money that has gotten from the bank. And then on the other end, we have received 15,000 into the bank, okay? Let me know. Just chat. Done the math. Just chat. So 131,500. If you less 1,500, you reduce whatever, you're going to get 145, okay? 145,000. Actually, let me take it in the next period. This is going to be the balance carried down when it is on the debit side, okay? We use it on the credit side when we are balancing an account, okay? So that is 145,000. That is 145,000, okay? So now our adjusted cash balance is 145,000. That is 145,000. Any question? Nice. I'm on to wait. 145. Good. Yes, 145,000. Thank you for that. So this is our new adjusted cash balance. So our adjusted cash balance. Up to that point, let me know we understand. We have to get the adjusted cash balance, which is, we've come to see it is 145,000, okay? Now, let us go to the bank reconciliation statement. Now, this one, remember, you don't call the bank and tell them, now you see our bank balance. No, you're doing this reconciliation for use internally so that you have a clear representation of your cash balance as at this particular point compared to the transactions that have happened. The bank records remains as they are. What we do is we prepare a bank reconciliation statement. Always remember, in everything, if you've seen in my teaching, always have a header. For you to be neat, always have a header. In this case, say this is a bank reconciliation asset. This, for example, let's say this is August, okay? As at 31st August. Is there 30th, 31st August or 30th in August? Okay, so you make sure you include that. You say it is a bank reconciliation, put the company header, such things. Always have a clean header, okay? Make sure a document, someone can read it and derive and understand it even when you're not there, okay? So you usually start in a bank reconciliation statement. You start with the balance as per the bank. The balance as per the bank is 150,000. Remember, when you come in as an auditor, let me take this one here. When you come in as an auditor, okay, Hamon, I will explain it to you. It is because I've put it in the carry down because of I do want it to confuse someone when you're balancing. When you're balancing the balance, for example, let me use this one here. Actually, it's here. When you're doing bus, perfect. When you're talking about the balance brought down, this was what was balance carried down from the previous period, okay? And when you see this account is balanced, okay? This account is balanced. When you want to balance this cash book account, you are going to put it on the credit side, but when you take it to the next period, it's going to be on the debit side. This is not a T representation of an account, so it's basically, we could even not talk about brought down or carried down, because when we are doing a T representation, then we would be able to see this is balance brought down, balance carried down. In fact, we should have this just as the balance, the adjusted cash balance, okay? With this representation, this is basically the balance in the cash book, which is 145,000. Let me know if that is clear. Let me know if clear. Feel for real. I'm trying to. David said he's having big amounts at once. I don't understand what you mean. Basically, when you're looking at the T account, this balance would have been on the credit side and it should be carried down. Carried down. But our representation here is over general ledger like, okay? Let me know. Nice. So when you're redoing the representation on like this, now let's say this one actually, you can just, if I was to draw the T representation, it should be like this, you know, T account should be like this, okay? So for you to balance an account, you're going to see you will need to have this 131 on this side, so that you're going to have 229. Then in the next period now, in September, this 131,500 is what is going to be here. Okay, this is what is going to be here. Let me know as at that point you understand. Don't confuse that carry down and okay, nice. Okay, now let us go back to the bank reconciliation. The bank balance here is we have 150. So start with that. If an accountant walks in for an audit, they want to see that the bank balance that you use it ties to the bank, that bank statement first. You're not cooking numbers. You should not be cooking numbers. So this bank state, the balance has to be there. We know now this is where we are starting. Now we want to see that, we want to know that the adjustment you make here, what were they that are coming from these what are things that are making this balance in the bank to be different from the cash book? That is the adjusted cash book balance. That is what the auditor will want to see. Okay, and if it is at that unpresented check, remember when it gets paid, then the auditor is going to check the next period and see that it is there, that you're not cooking that there was an unpresented check. No, that check, when it gets presented, we are going to see it in the next bank statement. Okay, feel for real. When using general account, you use, when doing a general, you use the balance. Yes, you use the balance. A general ledger, you are able, basically you are able to summarize the balances because it shows entirely. It shows entirely these are the transactions that have happened to cash account, and you are able to see what is the balance. Okay, at that for that account. Okay, so I think I'm going to refer to you a video I've done before that is going to help you to make sure you don't confuse those two things. Okay, then now we need to be able to bring in the unpresented check. We need to bring in here this. We are saying one of the things that it was not in the it was in the cash book, okay, but not in the bank statement is what? Remember, there was this supplier C that we gave this check of 41,000. So we are saying one of the reasons why these two balances are not the same, it is this unpresented check, an amount of, you make sure you write that, maybe you write supplier C, so that if someone comes to read this, they can look at the records and see, okay, we wrote we record this this person, we gave them a check, then it is supplier C. It's just that they have not presented it to the bank. Okay, so here we are going to be doing what? We are going to actually supplier C is basically we have given them, but it's just that they have not yet paid. Okay, Leonard, let me understand what you mean by that. Let me understand what you mean. Let me understand what you mean. Let me see. Leonard, so you what I mean by unpresented check, you have given out a check, but you have not yet you are yet to give to the supplier is yet to give out that check to the bank, or even they are given the bank the check, but the check is yet to be processed. Okay, the check is yet to be processed. Okay, so if you are together, let us continue. So then another thing we need to do, we need to less the wire transfer. Okay, actually we are working backward. Okay, so let me explain this. So in our adjusted, because we've already done the adjusted cash book, then to arrive at the actual balance, we need to remember our adjusted cash book. The adjusted cash book, we have 145,000. Okay, so we need to be able to compare what is reducing these. Okay, so if we take let me see the amount that was in there. What was the amount? Sorry, I'm confusing the amounts here. So the check that was issued to the supplier, and then there is the wire transfer that a customer made that wire transfer, but we are yet to receive it. Okay, so what we are saying, there was an unpresented check of 141,000. Okay, so we are lessing this, and we are wiring, because this unpresented check is going to reduce money from the bank. This is going to reduce the money from the bank in the next time. Okay, and now we want to add this wired transfer. Okay, because this is going to receive money into our account. Okay, this was, which client was it? What was there? Any name? No, it was just a wire transfer of amount 36,000 from one of your customer. Okay, so we are going to add this 36,000. Okay, so what is this going to give us? What is going to give us? The balance is now going to be 150,000. We less 41,000, then we add 36,000. Let me know what is going to be. Let me know you're following. I know my network has glitched a little. Let me know. Okay. Good. This is going to be 145,000. So these two, they need to be the same. Okay. And so you see what has happened here. Let me know if you understand. You need to understand the logic so that you're able to understand what is happening here. So we are saying this check we paid. We gave it to the supplier. What has the in our business transaction, we have paid the supplier. We have paid the supplier. It's just that the supplier has not presented this check to the bank. Okay. So in this case, this is some amount we should not record as an asset in the business, because we gave it it's just that it is in the form of a check right now. Okay, so that is why in this bank balance we need to come and less 41,000. Okay, excuse me. Then we have this wire transfer. Let's say our client is in overseas. Okay, Remember, wire transfers for bank can take time to be processed, okay? It can take even 3 days or 4 days. And you can see here, it's written clearly, this money got to us September 2025, but the money was released in August 2025. So as of August 31st, August or end of August 2025, this amount had been wired to us, okay? So this is money we should recognize as an asset already in the business. Remember, cash is an asset to the business. So as at the end of August 2025, this is the money that is in the business. It's just that it has not yet, it is in the process of getting processed by the bank, okay? So that is why we are adding this. So we are going to get 145,000. So remember the things, what has happened here, if you didn't want even to do the adjusted cash book here, you could do the adjustment in the same, some people do the adjustment in the bank reconciliation statement down here, or you just do your prepare your adjustment cash book, you get the adjusted cash balance, which is 145,000. Then what was in the bank statement that you have brought into your cash book to get your cash book balance. Then what is in your cash book that is not in the bank statement, this is what you bring here. This is what you bring here. Feel free, if you update your bank account, not the cash book, then you reconcile the cash book. Can it be possible and with it balance? Now the question is, how will you update your bank account? Remember, the bank statement is an external record, and it's what they have is the records that the bank has internally for themselves. There's not that you can't call them and tell the bank, now you see there's some money that has been wired, it's just that it has not, we have not received. No, that cannot happen. That is what now it comes into the bank. That is why now we have a bank reconciliation statement, because we are looking at the balance and then we are like, these two things, they happened, it's just that they are yet to hit the bank. Remember, this is an internal record, okay? This is an internal record. Feel free, let me know if I've answered your question. Let me know. So what I am saying, before we continue, let me make it easy. Okay. We are saying we have here the cash book. Then we have here the bank statement. Then we have here the bank reconciliation statement. So this is the cash book. This is the cash book. Then we have the bank statement. Remember, this is an external record. Then we have the bank reconciliation. Here we have the bank reconciliation, okay, statement. So what we are saying is that the bank statement, what is in the bank statement, remember you could have those charges, you could have this subscription that is a direct debit in the bank that you've not recorded in the cash book. What is in the bank statement that is not in the bank cash book, and you check, you see this is not a malicious, there's no one who is trying to steal from you, you move them to the cash book, okay? These are the bank charges. These are the bank charges. You make sure now you record them in the cash book. These are the direct deposit that you might have missed. Okay, so you were not aware this deposit was done. These are those subscriptions that are being debited in your account directly. Okay, or standing orders. This could be also standing orders that you have in your bank. So all those records, once you see them, you take them to the cash book. In that, you're able to get the adjusted cash book with the updated cash balance. Okay, now this one has the updated cash balance. And then what about what is recorded in your cash book but is not in the bank statement? What is recorded in the cash book is not, and you can't see it in the bank statement. You can't call the bank and tell them that I have some money wired. It says that you've not. No, till when they receive and they clear as they should clear and make sure that clear for fraud and everything. That is when the bank is going to record. But for you, what you do is you now prepare something now we are calling the bank reconciliation statement. So anything that was in the cash book and not in the bank statement, you bring it to the bank reconciliation statement, and now you adjust those things and compare now the balances in the after referring to the bank balance. You compare that with now the adjusted cash book balance. Okay. Yes, feel for real. Thank you so much. You've put it correctly. I'm coming back to the questions again. So what is in the cash book and is not in the bank statement, you go and less or add to the bank account balance, and then it must be equal to the balance at the updated cash book. That is correct. That is correct. You less or add depending on what. If that money it is a scenario in this case, you saw this is money that is going to leave your bank. This is money that is going to leave your bank. So what do? You less, because it is going to be a credit. It is going to be it's going to be money that is moving from your car. It's coming out, okay? Because the supply is going to get that money. And then the wire transfer is money that is going to come in. So that is why you add. And this one you less. Then let me go back here. How do I treat a RD check received from a customer? RD in full, RD check in full. I'm not so good with acronyms. RD, what is RD? RD. Oh, the one that has bounced. Good. The one that has bounced. That is Besalena. Besalena, so you've received a check from your client and it has bounced or it has not been met, okay? So let's say already in your cash book, the moment you received that check, you recorded what? You recorded that you have received. So you debited your cash book. You need to reverse that transaction. You need to reverse that in your cash book. But when you go to the bank, there's not going to be any record in the bank statement, but in your cash book, when you received that money, for example, it was from, let's say, your customer. So you debited, let's say, a cash account to receive that money, and you credited, maybe if it is revenue or your account receivable, depending on the scenario there. You need to reverse this transaction by actually doing the opposite of it, which is crediting cash and debiting whatever the other account that was involved in this case, okay? So you need to be able to reverse that so that you remove that from your cash book. Remember, in your bank statement, you don't have that record, but as at this point, you need to reverse it, because now this check that you have received it's bounced. Till now the client writes you another check, then that is okay. Can by any chance a bank statement be wrong? Helen Musau, the chances of a bank statement being wrong is, I would confidently tell you 1%. Why? Because the banks, they are regulated a lot, and the errors, their systems are much automated. You can imagine the bank has how many clients, and they must keep account of even your 1 shilling, okay? Your $1, they must keep. So their transactions they are very much regulated. So the errors to be there, there have to be an explanation, okay? There has to be an explanation. Maybe someone used your debit card or your credit card to make a transaction that you're not authorized. You see, now this is not the bank, this is fraud, okay? So such things, but it is a rare case to find an issue on the bank statement. That is why we use it to check to check per transaction. But if you find an error in the bank statement that a transaction that you cannot understand, then it is your obligation again to ask the bank, oh, what was this? What was happening here? I didn't authorize this. I cannot understand why you need to have an explanation of what is happening in your bank, okay? Then I need the bank balance. No, the bank balance, no. Remember, their systems are automated. So the bank, we are relying what the bank is telling you as at that time. This is the closing balance. This is the closing balance. We are using this. It's like having it's like the way a doctor has, can call another doctor to tell them, assist me, I think in this patient has this, what do you think? Second opinion, okay? Basically, rarely will two people have the wrong understanding of something, okay? Then we have sometimes bank do some adjustments which are wrong through debiting your account. Yes, and when you get such an error, you just ask them. But when it comes to bank to business, mostly you're going to find the transactions that are happening, they must make sense if they are homogeneous, like most are of the same nature, receiving from the client, from the customer, paying from, paying your suppliers, paying your utilities, okay? Maria Kini, welcome, no problem. Tomorrow we're also going to be live exactly from 8 a.m. Don't be late. Welcome again. Then Hamon, does it mean after updating your cash book and bank reconciliation and it's not balancing, it means you are wrong? It means there's something that is wrong, yes. So if you update your cash book and you have your adjusted cash book, you have your adjusted cash book balance, okay? And then you go take your bank balance, and then these items that were in the cash book and were not in the bank, you add them and subtract where, then there's something you're doing wrong, because it will always be the same. You're going to find that this balance should be equal to the adjusted cash balance, or you've missed something, okay? It could be maybe you're dealing with cash in hand. You might have some physical cash that you withdrew, so you're not catering it to the fact that you have some money, or you physical cash. There are many petty cash, okay? So you're going to find for a big institution, they have petty cash reconciliation, they have bank reconciliation, and you do a bank reconciliation for each account, bank 1, bank 2. You can just give them a name, okay? Yeah. Like a code to remember. We've done bank reconciliation for bank 001, 002, like that. Where Hamon Avanza, does it mean after updating your cash book and stop balancing? Okay. Feel for real. May I know this, please? Cash book is having the financial transactions or record for sale and purchase for daily only? No. But we are not expecting in business for you to have personal transaction together with your business transactions. No. The cash book records all financial transactions for sale, for purchase, for your supplier, for all any transaction that is involved in the bank. You should update it in your cash book, okay? Some institutions, they usually have, this bank is for customers, this bank is for our capital expenditure, this bank is our operating expenses, this bank is for, if it is a not-for-profit, these are for receiving donations. There are even some donors that request you to have a bank account for their projects. An institution can do that, but at the end of the day, the cash book has to have all the records that are happening in those banks, not only for that are involving the sale or purchase. It could be okay. The thing is, this most times you're doing these transactions mostly in a business, whether you're selling or you're receiving. It maybe you're purchasing supplies or you're selling. That is the common transaction you're going to find, but there could be other things, payment of loan, okay, such. Yes, it must balance. I don't know if I missed any question. I don't know if I missed any question. Oh, I've seen one. How do we still check? That is basically it would be treated the same way. Let me get back to the live stream. So yes, it would be treated the same way as any that would bounce, okay? So you have to have an understanding with the person who had paid you so that they write for you another check. But now you can't record it because now you have not. It's no longer useful. It's no longer a check that you can present it and get money out of it. Okay. Let me see any other question. Bank balance and cash book will always be available. They should always balance. Yes, the bank balance and cash book will always be available. One, they won't have to balance till you do the bank reconciliation statement to understand why. Remember, this bank reconciliation statement is basically to help you understand, where was the drawing, to help you understand why the bank balance is not the same as the cash book balance as at that particular point. And then you look for these things that you might have missed, or rather that you have not pre-recorded at the end of the period. You move them to your cash book, you get your adjusted cash book. And then now for the items that are not in the bank statement, it means you gave out a check, it has not yet been presented, but now you gave out that check and it has not yet expired. It's still a viable check that can be presented and someone can get paid from it, okay? So those things you bring now in the bank reconciliation statement. It could be some money that has been wired but you're yet to receive, okay? Such things. So all these you need to bring them together. Now, I don't know if my stream you can still hear me? You can still hear me? For the ones on TikTok, remember we usually having these on YouTube. Remember we are usually having this on YouTube. Has my quality of the video gone down? Oh, it's better now. So Helen Musau, you're saying I am paying using a negotiated USD rate given by the bank on the actual pay. The bank uses a different rate. How can this be recorded? I am paying using a negotiated rate given by the bank. So the bank has given you a certain negotiated rate, right? And the actual they use a different rate. Before we start recording this, is this not the bank not doing as you requested? I'm paying using a negotiated USD rate given by the bank. On the actual pay, the bank uses a different rate. Uses a different rate. Let me know if first you can hear me. Okay. How can this be recorded? It will have to record the transaction depending on the rate that has been used. But I would like to understand more of your scenario because are we saying what exactly are we? Do you need to make a payment in USD or in whichever Kenyan shillings, for example? Does the other person require to receive the money in dollars? So that is why you have this negotiated rate. And why then have you add the negotiated rate and then why do you have a negotiated rate and then the bank uses a different rate? That is what I'm trying to understand. Do you have a note for Kiswahili? Helen, maybe you can give me more context. I answer to your question. Okay, nice. Phil, for real, do you have a note for Kiswahili? Kiswahili, please, I really need. For kiss? What? I don't understand. For what? Kiss. Do you have a note for? Let me understand what you mean. Let me understand. The people on TikTok, remember, we are doing this on YouTube, okay? The people on TikTok, we are on YouTube. There's a link on my TikTok stories that you will all use. Always go subscribe to the account so that you don't miss the streams. Feel for real, let me understand what you're asking for. I didn't get you. Also, Helen, let me know. Some companies, what businesses usually do, if you're operating in Kenyan shillings, for example, you decide and you're reporting in a different, you're using a different, like a foreign currency to report, then you agree when reporting, we are going to use these, let's say, CBK rates or Rwanda rates, okay? And some usually connect these directly from the accounting software. So they have a record of they have a record of what is happening, okay? So they have a column for Kenyan shillings, they have a column for USD as they do these transactions. Then mind and cheese is bank reconciliation, the same as correction and errors. Correction and errors is, I will put bank reconciliation under verification. Correction and errors is when we do a trial balance, it's not balancing. Then we have a suspense account. I don't know if on this week we're going to do one session. Yes, we're going to do one session on suspense account and correction of errors on Saturday. Yes, on Saturday. So correction of errors is when you have to reverse a journal entry, when you have to, maybe you did a transposition error, you were supposed to record, let's say, 1500, but you recorded 1600. These are what we are calling, what do we do to correct these errors? When the trial balance does not balance, then we have what we refer to as the suspense account, okay? That is what basically is under the correction of errors. We're going to look at a topic. You can check the schedule on TikTok and Facebook. I think we scheduled to have that topic on discussion on Saturday. But the bank reconciliation, it is for verification. It is for verification. We want to verify our cash balances at a particular point. Then, yes, no, it is not the same. Good. Then Helen, I had an instance where I was paying a client in USD from Kenyan shilling account, and the bank agent gave me a negotiated rate, but when it came to the actual pay to the supplier, they used a different rate. Okay. Then you see in your records, you have to use the rate that they used in recording, but that is basically the trust. That basically means there is a mistrust with the bank, because if you had a negotiated rate, that is the rate they were supposed to use to pay this client, okay? But in your records, you will have to use this rate that has been used, okay? You have to use the rate that the bank eventually used. I can't take the ones who are here on TikTok. Remember, I am live on YouTube. There's a link on my TikTok stories. Okay. Good. Okay, Harmon, that is fine. The class, actually, let me just tell you when we are doing that class, because we have a schedule. And today, for the ones who've joined late, we've already completed the class on the bank reconciliation statement. But the good thing is I have a pre-record of this. You can watch the whole section on YouTube. I'm going to post it. Actually, before tomorrow midday, you're going to find it, so you can re-listen, okay? So I'm saying for racial analysis, that is financial. I know this, you're talking about the financial analysis. We are going to have, let me tell you the schedule we have. Just a second. So we have Saturday, 12 p.m. We'll be looking at suspense and correction of errors. And then on Sunday, I can fix a day for racial analysis, or we can do it. Let me actually fix it on that day because it is on a Saturday at 12 p.m. We can do suspense and all the analysis, not only ratio analysis. Note that. That is Harmon. So this week I've made sure that at least we cover many topics that are mostly asked. And one of the main questions you're going to find is the bank reconciliation statement, the statements or the financial statement, that statement of profit or loss, financial position, that is the balance sheet. I think tomorrow we are looking at this statement of profit or loss. Yes, profit or loss, then statement of financial position. On Saturday, I said you're going to look at the suspense account at 12 p.m. And then later in the evening, we'll be looking at allowance for bad debts, that is doubtful debt, or allowance for expected credit losses. And also another thing I want us to look at is the partner's account and statement. These are commonly asked. And also financial statement for not-for-profit, that is clubs and societies. How do we go about this financial statement for non-trading companies? Yes. So Helen Musau, no, it cannot be recorded as a bank charge. No. First, this was already recorded on the cash book. Reversing the transaction was a solution, or a posting of the difference can be done. Yes, you can post a difference. The two can work. Reverse and repost the correct, or you post the difference. But you see, so if you had a negotiated, let's do it practically. Let us do it practically. You wanted to pay, I don't know if this client had invoiced in dollars or in Kenyan shillings. So let's say we were paying 100,000, okay? Let's assume, I know the rate for Kenyan is like 129 now or 130, depending whether the bank is buying or selling. Huh? So let's say, let's use 100 for ease of math. So you thought the client, with a rate of 100, you thought the client is going to get 1,000, right? But then the client used, let's say, the client used the client used, let's say, 110, right? So definitely the amount is going to be less. But my question is, every company has a policy that you say, am I recording my transactions? What is our operating currency? Are we recording our transaction in Kenyan shillings or in USD? Always remember that. If we operate in Kenyan shillings, and it doesn't matter the rate that was used by the client, because at the end of the day, I gave you 100,000. That is what I need to record in my books. That is what I need to record in my books. But if you record in the company or in the business, you record in dollars. If you record these in dollars, that means you're basically, there is that, you need to, you either have the policy on saying this is the rate we use. I don't know if every time you have to pay, because most companies that record their transactions in dollars, then you will find their operating accounts are in dollars already. So there is no need for they keeping on converting and everything. So you're going to find that is going to be direct. But then you have to if not so, then you have these rates. You say that we are going to use CBK rates or Rwanda rates in your accounting software, or then you go for your option where you have a negotiated rate. So you went and negotiated for 100, but what was used is 110. You have to record with this 110. So the difference that was being cost here, this was 1,000, this is going to be maybe 9. Don't do the math, maybe 9, whatever. So this difference, you can now record it. You can now record it, okay? Helen, let me know if that's clear. Harmon, 12. Okay, so Saturday we have 12 p.m. and we have 8 p.m., okay? Then feel for real. But Harmon, no worry. After that, the video is going to be out. You can follow the session after that, okay? Then Feel for real, if you have CPA, can you qualify to work African wide, or you can work even in US and Europe with a CPA? It is accredited everywhere. Feel for real, okay? You can work in US. CPA is recognized globally. Uh, uh, then the bank paid 110. Okay, I think I've used the same scenario. Divide by 110. Let me get the actual figure here. So this is 909. So what is the difference between? So initially you recorded 1000, right? But now you have 909. This is the amount of money that is going. So you have a difference of 91. So you need to reduce. But now I'm wondering, I need the whole scenario in this question, because I need to understand, are you recording this thing in dollars, operating in Kenyan shillings? I need to understand that. I need to understand what is happening there. I need the whole scenario so that I understand. Tomorrow, feel for real tomorrow. Tomorrow we are live at 8 p.m. Tomorrow we are live at 8 p.m. Same time, 8 p.m. Come early so that you don't lose track. Okay? Yes, come early so that you don't lose track. 10 p.m. Anybody who is taking their exams from Monday, let me know. Let me know those people who are taking exams, and if you know if your friend is taking these exams, share with them. Share with them these live sessions that we're going to have all the way till Sunday. Helen, thank you. That is fine. You're much welcome. Tomorrow, feel for real, 8 p.m. tomorrow, statement of profit or loss. And before, familiarize yourself with accounting basics under this YouTube page, okay? For someone who wants structured learning, there is courses as well. You will see the link on all my social bios. I usually say, if you don't have, if you're a student, you don't have that much, feel free. You will always still find these videos on my YouTube, okay? You can always learn something from this YouTube page. So just check the playlist. I have 3 playlists. That is the accounting basics. I have the financial, and also I'm building the management accounting. So make sure it's pretty quality, and anybody can learn at whichever level they are. Okay. So with that, for the ones still live on TikTok and YouTube, I want to end it there. Let me know other questions as we end. That there is the aspect, Haman. So you're saying CCP. Actually, let me know the countries that you're joining from. Let me know the countries you're joining from. So corporate lending, this is for CCP, yeah? I think most CCC, I think most I think protects while customer present. Okay, I think most customer courses will be recognized, but one thing for sure, I can only speak on CPAs. For CCP, I'm not sure, but for CASNEB, for CPA, I can speak out of experience. So that is USA, you're going to see that CPA is going to be treated like ACCA. But for CCP, I'm not sure. Normalize that one, I am not sure. And I feel like for banking and finance, okay, for CCP, I know there is the understanding that this is on It deals with it deals with debt recovery, corporate lending, risk management. This is someone I think you want to actually I want to see if it has the same financial statement analysis. It still covers much of that is in CPA, but it's good for someone who is in banking now. Okay, so okay, I will be biased here. I would say I have much to support to compare CPA and CCP because I don't know much about CCP, but I would go for CPA because the topics that I'm seeing under CCP are also under CPA. They are also under CPA, and mostly, to be honest, most of the things after you study, when you get the certification, yes, when you have a certification from an institution that is recognized, for example, like CASNEB, the other thing that we are looking at, we want to know, because now we are looking at the topics, they're almost the same. We want to see the experience. It is the experience now on this sector that you want to get into. So, okay, for me, I would go basically for CPA. Up to the point that I am at, I would go for CPA because even when you look at what is commonly asked for, it's CPA. Any other question? Any other question? Any other question before we close for today? Any other question? Feel free to say the software will convert it into the currency automatically, depending on, remember, these things are usually linked. When, let's say, like institutions, what they do, they decide, okay, we're going to use the CBK rate, so they connect it. But now, what I understand the situation for Helen was that they are doing the negotiation aside, so meaning that, let's say, their system is not linked directly, so this is going to be treated per situation. But most institutions usually have like these rates linked in their system. So when a transaction happens in this foreign currency and our operating currency is this, we're able to see, okay, so in Kenyan shillings, this is what is happening. Okay, so any other question? Who is still live? Let me see who is on. Let me see any comments. For the ones who are on TikTok, remember we are usually live on we stream on YouTube. And for the ones who've joined here, I hope you've subscribed. If not yet subscribed, go subscribe so that you don't miss when I start the live. You are able to find me. You will be notified. So go subscribe. For the ones who are on TikTok, don't miss the class next time. We are streaming on YouTube. We stream on YouTube and we stream on YouTube. So check the link on my bio or on my TikTok stories currently. Go and follow from there. Any other questions? So I think I leave it there for today. And it's a good night. Remember, share it with your friends, share it with someone who is wants to study accounting. For the ones on TikTok, remember we stream on YouTube, so check link on bio and subscribe to the YouTube account. Okay, then with that, I don't want to leave anyone here without a bye, so bye bye. Bye, Rachel. Okay, we are going to look at cost accounting. So yeah, we'll have a session. Sorry, I abandoned my TikTok. So for people who are joining now, we just finished the class. So tomorrow we're going to look at the statement of profit or loss, remember? So if you are here, Abdallah, hi Abdallah from Somalia, hi Abdallah. Yeah, you just joined when I'm finished the class. That is first daughter our dad. Akai, okay, noted cost accounting. I believe it's someone who's doing management accounting. Hi, Akahad. Hello, like the live for others that is on TikTok. For the ones who've joined on YouTube, we are ending there today. Our session starts at 8 p.m. We just finished the class today, which was the bank reconciliation statement. But I am going to release a video. Bye. Okay, feel free. You're from Uganda. Nice, nice. That's good. When do you have the exams in Uganda? Let me know. When do you have exams in Uganda? So here on TikTok live. So Paula, that's nice. Nice to hear. So if you're joining, like the live on TikTok, remember we usually have the class, the session at 8 p.m. On Saturday and Sunday we have 12 p.m. and 8 p.m. Yes, 12 p.m. and 8 p.m. East African time. And you're missing the sessions because you've not subscribed to the YouTube account. You have not subscribed to the YouTube account. So if you do not subscribe, then you're going to miss. You are going to miss the session. So go subscribe the YouTube account. Go subscribe on YouTube. Go subscribe on YouTube. Go subscribe on YouTube. Go subscribe on YouTube. Okay, feel for real. That is well noted. We will get there slowly. I think I'm going to make a session schedule for a longer period so that someone can be able to know earlier before a week which topics we're looking at. Okay, Paula, I'll follow you. And Tasha, managerial, that is fine. I will teach managerial accounting. Thank you, your placa. But then for the people who have been needing, wanted to gift me, this is the time. You've been benefiting from the videos I make here on TikTok and on YouTube. Feel free to gift. Thank you, your plaque. Let me know which country you're joining from. The people who are here like the live. So management accounting, as you'll check from my YouTube, I've posted some videos on there and more will come. So go subscribe on that YouTube account so that you don't miss. So that you don't miss the YouTube, so that you don't miss. For you not to miss, go subscribe on YouTube. Greetings from Peru. That's nice. Thank you. Thank you. So for the ones who are late to join, you can always rewatch the video and the questions we're tackling. And I'm going to post a refined video on this page again. And don't forget to subscribe so when we start a live session, you're able to see. So we are actually today we are at 2. This let me see. Hello, greetings on TikTok. Like the live, if you've been wanting to gift, this is the time. You've been benefiting from the videos. If you have been benefiting from the videos. Okay. Thank you, the ones who are liking the live. Remember, subscribe to the YouTube. There's a link on my TikTok bio. Thank you, Ruben. Thank you, Ruben. I'm glad to hear people are benefiting from this. I'm glad to hear people are benefiting from this. And Remember, for you to get more videos, they usually I have courses on my website. You can purchase them if you don't have the capability. Then also on my YouTube, you can get the same, you can get the videos on my YouTube account. There's a link on my bio. Go subscribe, go support me. And yeah, let me know those questions that you've been having on TikTok. Let me know on YouTube. Okay, thank you, thank you. For the ones who are joining, like the live, 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 like the live. Let me know the countries you're joining from. Let me know the countries you're joining from. Financial reporting as well, yes. Ruben, I teach financial reporting. Check YouTube account as well. Check YouTube. Yes, I'm going to have more on those videos. More on those videos. Yeah.